Hello nieces, hello nephews, it's your Uncle Charters here, aka Uncle Ram, aka D Charters, and today we got to talk about a big catalyst this week. This is the option flow, but before we talk about the option flow, this Wednesday, we got FOMC, okay? Fed's going to talk about how much they are going to raise the interest rates. It's going to be interesting, and I believe it's going to it's going to give us some nice catalysts that will trigger some nice volatility for us to trade. Now, usually the strategy to trade FOMC is the first move is usually the fake one. We get the initial data release at 2 o'clock. You know, if they're going to rate, how much they're going to raise the interest rates. And then the market reacts a certain way. It's either going to be bullish or bearish. You know, it's going to pop to the upside, pop to the downside. And then at 2:30 when Powell speaks, usually there is a reversal. So if you're playing FOMC this Wednesday, guys, keep the false breakout or the false breakdown in mind, okay? Don't be a victim to those setups. Those setups are meant to fake out retail traders. But when we can recognize these setups and keep them in mind, we can also trade them, okay? When we can recognize it in real time, okay? So keep that in mind. False breakouts, false breakdown setups will be your best friend this Wednesday trading FOMC. Now, before we even get to FOMC, we got to talk about the context of the current price action situation that we are in, guys. Now, in a previous video, Uncle talked about the trend phase and the chop phase. Okay, trend phase is pretty straightforward. If it's an uptrend, we get higher highs, higher lows. If it's a downtrend, we get lower lows and lower highs. All right. But when we're in the chop phase, what does that look like? What does the chop phase, what form does it come in? All right. So usually when we're in the chop phase, it's gonna come in the form of channels where the market is ranging and playing ping pong between two levels. It could come in the form of triangle patterns, pennants, and bull flags and bear flags. Stuff like that, okay? Now here, we're looking at a daily chart here, okay? Now, if we go to like a smaller time frame, like the 1 hour chart, you can see clearly, in my opinion at least, a bear flag. We can see a bear flag. All these lines here are based on support resistance levels on the higher time frame. But we can see on this 1 hour chart that we got a bear flag here, okay? Boom. And I can clone this line, move it up to the upside of it. All right, we got a bear flag. So as long as we are within the bear flag, in my opinion, SPY is still in the chop phase. Now, based on this 1 hour chart and how I just set up this bear flag, the breakdown of the bear flag is at 387.5-ish. Well, actually, by the time market opens on Monday, it would be around 387.8-ish, okay? And by the time market opens on Monday, the breakout for this bear flag to the upside would be around 398.9, okay? So as long as we are within this range or within this bear flag, in my opinion, we are in the chop phase. And when we are in the chop phase, we want to be very tactical with our entries and exits. We don't want to chase home runs because market is chopping right now. All right. Now, the best time to try to chase the home runs is when we break out of this chop range, because the idea is once we break out of this bear flag, whether it's to the upside or to the downside, that we are going to head back into the trend phase. And trend phase are very nice. They pick a side, they pick a direction, they move in that direction, and we usually get like $10, $15 moves in a day or in a couple of days. Okay, very nice to trade the trend days, assuming one follows the trend. Okay, guys? So I hope that you guys can see what I'm talking about with this bear flag. How is the chop phase? And as long as we are within this range, I recommend scalping or, scalping, not chasing home runs. Manage your risk. I do have levels within the chop range that I would like for us to watch out for. Okay, now if I zoom back out to the daily chart, I still have that 61.8 fib level at 391.4. Market closed below that level on Friday. So if we want to get bullish here and test the top of the range, It's going to have to recapture 391.4. And of course, I got that yellow trend line right here. It connects January 10th, January 19th, and March 2nd. Low, we got a 1, 2, 3 touch of it this past week as resistance. So if bulls can recapture 394, that will be a recapture this yellow trend line. All right. It also recaptures the 200 daily moving average. With the next fib level, I got at I got 395 as a resistance as well. And then the next critical fib level is at 396.5. All right. Above 396.5 would be pretty bullish. All right. We could see more upside to 398, 400, 401.6. That's a 38.2 fib level. And this yellow trend line that I got here, the test of it is now at 405.76 come Monday. Okay? So that's the bull case scenario that we definitely want to watch out for this week. Now, the breakdown, like I said, we go back to the 1 hour chart. The breakdown of the bear flag is at 387.8-ish. All right? I do have support around 388.5-ish. Okay, you can see we got a double bottom around that area right there. If we break 388.5-ish, 387 to 387.8-ish zone will definitely be watched. Break that down, that would be pretty bearish. Okay, we can see 384. 384 is a critical support level that I got as well. That's a 78.6 fib level from December low to a February high. All right, we had a bounce off that level March 10th and a bounce off that level March 15th. So market recognized that level and there was strong buying pressure there. So we can absorb all the buyers at that zone, at that level, and break it down. That would be pretty bearish as well. I would favor more downside down to 380. My ultimate target would be around 375-ish, 374.7-ish December low. But yeah, below 384, we got to watch support. I played level to level, one level at a time, 382, 380, 378. And then maybe we'll go hit 375-ish December low. All right, but remember, we got FOMC Wednesday. Maybe we'll chop Monday and Tuesday. Hopefully not. But as long as we are within that chop range or that bear flag, I'll be scalping. I will not be, I'll be defensive with gains that I make. I will not try to be a Superman of the stock market. Okay, I'm going to be sheep style. No greed. Protect my gains. All right? Now, triple Q, it bounced off that 61.8 fib level. Okay, remember we talked about that it recaptured 303.8, the 61.8 fib level on Thursday. It bounced off that level on Friday. Okay, so there is some buying pressure there. But in order to get that false breakout setup, it needs to start with breaking down 303.8. The false breakout setup will be the trigger for us to enter put. So if that level breaks, look to enter put. Targeting 301, 298, 298.9-ish. Okay, that's his blue trend line that we broke out recently. All right. And if that failed, 297, 294.3, and then there's a gap around 290.5-ish would be in play. Okay, so the bear case scenario starts with 303.8 failing. Play it level to level. If it breaks down another level, you can always add to some winners. All right, I like to leave runners as well. But if it stays above 303.8, the next critical resistance I'm watching is 306.4. It needs to clear that to trigger more upside. Put in 309.2-ish, 311, and 314-ish in play. Okay, so yeah, just play one level at a time. Above 30, what is that? 306.4, 306.5. We can round it up to an even number. Look to long when resistant clear. Look to short when support fail. IWM showing bearishness here. I had that level 174.3. This is red trend line here. Recaptured it on Thursday, but back test it got back below it, treated like a resistant, and just found selling pressure. So there's a critical support at 170.37. All right, that's my 78.6 fib level. All right, from October low to February high. If 170.3 fails, look to short putting 168, 166.6, 165.7, then 162.5 back in play, okay? It can't get bullish, or at least short-term bullish, unless IWM can recapture 174.3 and clear, must clear 176.5 to trigger more upside, with 178.6 and 180.8 in play first, all right? Tesla, interesting outside day candle here, outside daily candle here. Yeah, that still got that critical support at 175.6. Okay, remember that's a 23.6 fib level from all-time high down to the January 2023 low. All right, so definitely got to watch that. If you're bearish, that's the level you want to see loss. Okay, to trigger puts, to enter puts, or to go short. All right, if you're a bull, you need to see that level continue to defend as support. But like I always say, defense is not enough. We need to see offense. Okay, so there is resistance at 186. I need to see 186 and 190.3 clear. Maybe we can go test this yellow trend line here at 197.8ish. A break above that would be a breakout. Okay, look like we're both flagging. But obviously, if it loses 175.6, all right, what do we do when support fails? We look to short. 173.4 is the first target. If that fails, a deeper sell-off incoming, guys. Deeper sell-off incoming with 168.5. This pivot low here at 163.9. Then 159.7 is in play. 159.7 is the 50% fib level. And if that fails, we could go hit that 61.8 fib level at 146. There is a gap around there, okay? 144. The gap's at 144, so very close to the fib level, right? So very bearish. If we start breaking down support, starting with 175.6, okay? Apple, you know, we watched that 153.5 level for quite some time, all right? That is the 50% fib level from all-time high down to January 2023 low. We finally broke out of it on Thursday. Yesterday didn't quite get continuation, but we did get some chop. Now, if bulls want to be bullish and want to stay bullish, want Apple to stay bullish, that 153.5 must hold on any pullback to keep the breakout intact. Now you can see here that we had a level around 156.4ish, okay? At 156.5, we got a rejection here, rejection there, couple of rejection this past week around 156.4ish. So to show follow through and more upside, we need to clear 156.4 to put 157.5 and 160.4ish in play, all right? So to be bullish, stay above 153.5 and clear 156.4. All right, to trigger more upside. Now, if you're bearish, you want to see 153.5 break back down, give us the false breakout setup to put 150, 147.5, and 146.5 back in play. All right, now let's take a look at some inverses. You see here that the VIX has been chopping. Got a bunch of candles side by side. It's going up one day, it's going down. Another day, up, down, whatever. But as of right now, we still got to pay attention to the levels. That 50% fib level at 26 rejected on Friday as resistant, but it still managed to close above the 38.2 fib level at 23.8. So if VIX want more upside, it needs to get back above 26 and clear 28. All right? We need to see some follow through with these breakouts as well, because VIX giving us breakouts but no follow through. VIX give us breakdowns but no follow through. All right, so if it clears 26 to Monday, then the following day on Tuesday and Wednesday, of course, it needs to continue to stay above 26 and trigger more and clear more upside, more some resistance starting with 28 and 31. Okay, same thing goes with the bearish sentiment, the bear case. If it breaks down support starting with 23.8, then the next day we need to see a second day of staying and closing below 23.8. Preferably break it down the next support at 21.2. All right, does that make sense, guys? DXY closed back below the 23.6 fib level at 104.1. It closed below. That is bearish. So be careful, guys. Be careful. Keep an eye on the DXY. As long as it stays below 104.1, this could be a sign of bearishness for the DXY, which could be a sign of bullishness for the SPY. The next critical support that I'm watching is at 103.4. That's this green trend line. This green trend line that I'm watching has been tested as support and resisted multiple times. So a breakdown of 103.4 could trigger more downside, coming down to 102.8 and maybe even lower. So bottom line, below 104.1 is bearish on the DXY. So it needs to recapture and clear 105 to be bullish. All right. Now here is the option flow. Okay. Filter for 500K premiums or above, 70% into the puts. All right, so we're still seeing big money betting to the downside majority, but there are some calls coming in here and there. Okay, now something that sticks out is this March 31st expiration date, 362 strike price. That's very aggressive, over 5,000 in size. Will they get paid? We will see. This one is a 340 strike price for April 21st, for over 5,000 in size, over 600K in premium. Now, this one is a call for strike price, but it's a block order, so not very aggressive. Now, the one that is aggressive is this call right here, 395 strike price for March 20th. So come this week, they're betting that it goes to 395 or higher, or maybe we'll see. But that's as far as the aggressive play for calls go. All right, QQQ 91% into puts. All right, 91% in the puts, seeing a good amount of sweep orders coming in. The one with big size, though, it's a block order for 306 strike price. That's puts. So in the money put, and this is a split order for a 270 strike price for September 15th. All right, let's see, IWM 100% into puts. That on Friday, 100% in the puts. This one is a sweep order, very aggressive, 4.1 million in premium, over 23,000 in size, 155 strike price for April 21st. That's very, very aggressive, guys. Tesla, 61% in the calls, 39% in the puts. We're seeing mostly block orders and splits, a couple of sweeps, so not very aggressive and decisive moves as far as big money is showing. Apple, 76% in the puts, seeing a good amount of sweep orders here. This one, April 21st, expiration date, 130 strike price. They entered around 155.5-ish, okay? So over 17,000 in size. Pretty aggressive. This one's a 150 strike price for puts for June 16th, over 5,000 size, 3.5 million in premium. And another one, 155 strike price, April 21st expiration date. So sweeps of puts, 6.3 million in premium. So we're seeing some aggressive move for IWM and Apple as far as bearishness goes. All right, and let's end with the VIX. And there you go. That's the VIX, 64% in the calls. All right, guys. So I hope you guys enjoyed this video and found value in this video. If you want more content from Uncle Charters, consider joining my Discord. Information is in the pinned comment below. Have a great day. Peace.